Well, it's true there have been a lot of wild swings on Wall Street, but I just want to show you what's actually been happening to the share market here. What we had was a 6-day slump of 15% that accelerated each day and reached a climax on Tuesday morning after a 6.7% drop on Wall Street the night before, as blind panic took hold. Since that low at 11 a.m. on Tuesday, the All Ordinaries has recovered 400 points, or 10%, without much volatility. So with that reality check in mind, here's what happened today. The All Ordinaries up 0.8%, and the big mover was News Corp. Obviously, investors have got over their distaste about phone hacking. Telstra added another 2% after yesterday's better-than-expected profit, but BlueScope Steel fell 7.7% after announcing a $900 million write-down of its assets. ANZ also went backwards, but most of the banks were roughly steady. It was another big session on Wall Street last night, 4.6%. Following some frantic buying in Europe after short selling of 30 banks was banned. In Asia, markets were patchy, with Japan down a bit and China up a bit. Unsurprisingly, perhaps, there is now total confusion about what's going to happen to interest rates in Australia. There was a survey of consumer expectations about interest rates released today that showed 73% of people reckon rates are going up, as shown by the graph. As I mentioned the other day, the futures market is predicting a series of rate cuts. And I can tell you that the consensus of economists is that rates won't move. The Australian dollar is going with the market forecast, that is down, although there's much more to that than domestic interest rates, of course. I'll be back on Sunday with Inside Business and interviews from Europe, America and China, as well as the CEO of Commonwealth Bank, Ralph Norris. Till then, that's finance.